Americans are currently sitting with the highest level of credit card debt in history. On top of that, there's auto loans and student loans and other forms of consumer debt. The last several years, we've seen inflation at a very high level, causing Americans to have to use credit cards more than usual, including even for food. And for many homeowners, they're also sitting on a ton of equity, but there's a dilemma. You can't access the equity typically without doing a cash out refinance, and that really low rate you currently have will go much higher. Even with rates coming down the way they are right now, it's still significantly higher, 2-3 times higher than what you're currently sitting on. And so the only thing you can do is try to pay them off on your own, and that's very difficult to do. So what if I showed you a strategy that would allow you to consolidate debt using home equity without touching your first mortgage and potentially saving $1,000 a month? That's what I'm going to show you in today's Todd Talks video. So let's jump right in. All right, so this is the example. We're going to take a property worth $545,000. It has an existing loan amount, existing balance on the current mortgage of $294,000. This borrower has $100,000 worth of debt, credit card and other, but they have an interest rate of only 2.65%. But the payment on the first mortgage is only $1,291. And there's property taxes, but they're paying an additional, so the payment's only like $1,856, but they're paying an additional $2,850, more than the mortgage between auto loans and credit card debt, okay? So, but we have that 2.65% rate. So what do we do? A couple options. Option number one, this is the traditional option most lenders would do, is a cash out refinance. In Texas, in fact, let me make an important note about this. In Texas, you can borrow up to 80% of your home's value. So you take 80% of the appraised value, and then you subtract out what you currently owe, and the difference is what you can use for a debt consolidation. But if you do a cash out refi, and sometimes it makes sense depending on your interest rate. Okay, but in this case, in most cases right now, even with getting a nice interest rate on a cash out refi, in this case 5.99%, it drops the payment to $2,891. That's a huge win, right? A huge win. But, and here's the big but, we can do a home equity loan. So a home equity loan is what's called, we would do a closed-end second. In other words, it's a fixed term, meaning it would be a 15 or 20-year second mortgage. It is a cash out, but just for that part of it. And with that cash, you pay off all of the debt. And the rates on those home equity loans are higher. They're anywhere from 7, 8, 9%. In most cases, they're because prime rate's 8.5%. So right today, they're a little over 9%. But let's look at the magic of this. Look at the blended rate. The blended rate is only 4.254%. And because the closing costs are so much lower, the loan amount is way, way less because you don't have to do no escrow account. You don't have that same set of closing costs. The closing costs are smaller. So you get your $100,000, your blended interest rates. Now this goes instead of to 5.99, it goes to 4.254 in this case, and the payment's actually lower to get your $100,000. Plus you have more equity. And if you look at the two, this is a great option for you to do. So if you're in that boat, if you get this video, if you're one of my clients, if you happen to watch this on YouTube, reach out to me if you're in that situation. What I typically do is this. I have you fill out an application. I do a credit soft check, and I have you give me your mortgage statement, and I have you give me your current homeowner's insurance declaration page, so I know what that is. I can pull the taxes, and then I can put together and see, based on what your current payment is, and then and what kind of debt you want to pay off, what the estimated value is. I can develop a debt consolidation strategy that could save you potentially hundreds, if not thousands of dollars per month. So reach out if you're interested. This is a great way to get rid of that consumer debt. Thanks so much. Have a great day.